values to maintain competitiveness. However, this option does not exist since the EU countries are all yoked to the euro. As the global economy slowed down, unable to devalue, the PIGS countries saw unemployment rates and budget deficits soar. There are other systemic issues with an economic union that is becoming increasingly apparent due to the crisis. And I think that there is some insight here about the implications for a GCC monetary union. The fragmentation of authority is one of the main stumbling blocks in addressing the crisis. Unlike the Fed, which was able to mount a massive coordinated program to combat the crisis, monetary authority is diffused throughout the EU so that a coordinated response is not possible. And that's been one of the real problems in addressing the crisis. A major problem is that banks in Eurozone countries are regulated by domestic monetary authorities. However, no problem is local. If a bank fails, the domestic problem rapidly escalates into an international problem. Countries like Greece and Spain are witnessing what seems awfully close to bank runs, even though they have domestic deposit guarantee programs. But these programs are not credible since the country itself is bankrupt. One of the lessons of the crisis is that it's very hard for a common currency to work in a fragmented economic and political system. Without an exchange rate system that can devalue to reflect differences in competitiveness between countries, more competitive countries will increasingly devour less competitive countries. Greek defaults end game, and what I mean by the end game is where do we see this heading? What seems like a logical outcome of what's going on? These are of course all probabilities. The end game, it seems to me, will probably evolve in the following way. Greek depositors are beginning to withdraw bank deposits in anticipation of an impending collapse. When the ECB, which is the European Central Bank, stops lending, Greece would necessarily be forced to issue its own currency, what I think he was pointing out. Once a precedent is set, a similar situation could easily happen in Spain or Italy. The end result would be a collapse of the euro. Okay, historical lessons of the crisis. And I want to end this again by pointing out that what has been will be again. What has been done will be done again. There's nothing new under the sun. Wonder whether anyone recognizes this. This is from the Bible, actually, from a wonderful little book called the Book of Ecclesiastes. The historical lessons of the crisis. The austerity imposed on Germany following World War I directly led to the rise of Hitler and eventually World War II. Keynes presciently warned of this in his The Economic Consequences of the Peace. And what Keynes did was he pointed out in 1919 that the austerity programs that were being imposed on Germany as a consequence of Germany losing World War I would eventually tip Germany into a world war in 20 years, which actually ended up coming true. It is astounding that Germany, which was at the receiving end of austerity policies in the 1930s, is today imposing similar policies on other countries. Keynes ended his The Economic Consequences of the Peace with this ominous warning. But who can say how much is endurable or in what direction men will seek at last to escape from their misfortunes? How soon we forget.
Thank you very much for this. That was an excellent presentation combining macroeconomics, finance, and economic history. We can come back to discussing the presentation a bit later. Why don't I invite our first panel speaker. We are very proud to have Mr. Vegetable Madani here with us, who's advisor to the EDB. And he'll speak for about 10 minutes following this presentation.
Where should I
Any place that you want to sit there, you want to stand, whatever you're comfortable with.
Well, can you all hear me? I think yeah. Good evening, ladies and gentlemen. First, I would like to thank Hannah for inviting me to be on this panel. It's quite an honor to be with all of you. would like also to thank Professor Sudhakar for such an insightful explanation of the Euro problem and an eloquent way to actually put it in a layman's language. So, thanks. I think you know, from what we read in the newspapers and hear from the news, and even from Dr. Sudhakar I've just mentioned, is that history tends to repeat itself. And before I go into what I'm going to say, are there any Greeks here?
Probably a good precaution.
Yeah, we've done a lot of Greek bashing today. I feel very bad to add one more, you know, to add to this bashing. But I was mentioning this to a good friend of mine a few days ago. I was reading one of the newspapers, and there was a survey done in 7 or 8 European countries. And basically, you know, one of the questions is, how would you rank the European countries in terms of labor productivity? And you know, as you expect, I think 7 of 8 countries have responded that the Germans are the most productive. Finally, the Greeks, they thought themselves to be the most productive. No, this is true. While I think Professor Sudhakar have really really explained how the Greek system is very unproductive and is prone to, you know, to run into economic problems. I think one of the things that come very clear is you know, the problem is how people behave, and you know, policymakers and politicians are people, and at the end of the day, borrowing from a book I've read recently, they are very prone to fall into the best case scenario fallacy. A bit of pessimism is always needed, especially when the times are good. And as you mentioned, austerity is needed when the times are good. But unfortunately, as we all do, for instance, if you get a pay raise, the last thing you think about is how to save this pay raise. You'll probably go you know, take a new loan and buy a new car or buy new furniture. That's our nature as humans. We rarely engage in the worst case scenario. We always think that tomorrow is going to be the same as today. And countries resemble this. So there's a lot of lessons here to be learned. Policymakers and politicians cannot afford to be euphoric. They have to plan for the future. They always have to think, what if things go wrong? Okay. I think I'm loud here, and it's not a big audience here, so I'm doing my best to raise my voice. The other thing which is very clear is when countries come together, there is a lot of, again, I borrow this word, a lot of euphoria when countries come together, because you know, people like to be united, they like to share a common goal. But that also puts a lot of restrictions on countries, and as we have seen in the Greek problem, there's a two-tier problem. It's first at the country level, they run into deficits and debts, but their way, if they want to get themselves out of it, it becomes very difficult because they are a part of the union and they cannot react very easily. And a classical way to get out of this problem is to print more money. We all know this, print more money, it will devalue your currency a bit, but you'll be able to export your in a country like Greece, it will be able to attract tourism and all these wonderful things. But they cannot do that because they're part of the euro. And I think one of the gentlemen here mentioned the best scenario is for them to exit the euro, go back to the old drachmas, print their own money. But there are a lot of people also who are pushing against this because they think the currency will be devalued the first day it's in circulation, and there will be very high inflation, unemployment will rise. And that could be even fuel a further crisis in Greece. And as we have seen, it could be a setting for a world crisis. As you have rightly mentioned, what happened in Germany and in the 1920s have led to a second world war. We've seen how the Greek people have reacted. There was mass demonstration. The government resigned. There's a new government now. There's, I think, there's a vote which is June 17th.
Very soon.
Yeah. So we don't know what will happen. Spain is entering it's on the horizon. So is Italy. So it could be. So far, it looks like a European problem, but it could be very soon a global problem. And the question that poses itself for us as a GCC: what lessons are there to be learned, and are we going to be impacted in any way or form? And of course, the immediate answer is, in a world of globalized financial markets, there will be the effects that will be felt in our economy, but the extent of it is still unknown. Maybe one of the good things is that we don't have a large exposure to sovereign debt as GCC countries to the European countries. But we all know that private investors and funds have both recently and even in the past, they have huge investments in European banks and financial markets. And if any of these banks experience runoffs and there's a massive withdrawal of capital, the share prices will definitely plummet, and the effects will be felt here. And we have seen in 2008, Dubai was affected. They were part of the housing bubble, but luckily they were able to get out of it by taking some measures and with the help of Abu Dhabi. The other thing is, the GCC countries are very much dependent in their economy on oil revenues. And oil so far have stayed above the $100 level, so this is good news. But if there is a recession, a long recession in Europe, there is a risk for the oil prices to be lower. If the Asian demand is there as it is now, okay, we're protected. But again, if everything is integrated together, so this is something that has to be watched. We all know that governments are relying on the oil to finance the projects, and there are a lot of projects are ongoing at the moment in the Gulf. There's a number of airport expansions. There's metro systems being planned, I think, in Kuwait. Housing schemes. We all know that many of the GCC countries have announced massive housing schemes for the nationals. All of this has to be financed by the government budget. So, in case you have problems in the private sector, especially our governments didn't really explore the bond market as much as the other countries in Europe and the United States. So that's maybe something to consider for bonds. One thing which really I picked from Professor Sudhakar presentation is there's a vicious cycle of developing bubbles, and I think this is part of the way we think. I mean, if you had a bit of money, where would you invest? You would invest in the highest yield. Obviously, if you're faced between a choice of a 10% return or a 2% return, I think most of us will go for the 10%. So we will create bubbles.
But what about risk? 2%?
I understand, but I'm speaking as an individual. We rarely exercise that type of analysis and pessimism, in analyzing risk. We always look for the immediate return, the highest return. And financial markets are, because many of the financial markets banks, they're interested in quarter by quarter reporting, giving bonuses. So the thinking is always short term. You rarely see a banker who would think 4 or 5 years, down the road. He's more interested in what is this bonus going to be at the end of the year. So he wants to maximize the return this year. It's obvious. That's the way behavior is being driven. So that's my recap on Professor Sudhakar presentation so far. Thank you very much.
Thank you very much.
Lovely analysis of what Professor Sudhakar has presented, and also pointing out on the repercussions of the region, especially in the GCC, on various effects that this contagion effect may have. We'll come back to discussions and questions a bit later, but before that, it's also my honor and privilege to invite Mr. Zakaria Hedges, Chairman of the MENA Center for Investment, to say a few words as a follow-up of the presentation.
professor, so I cannot get, I hope so he can hear me in the back. If you allow me, I'll put just the same quotation that Professor GDP equal, correct me, Professor, plus consumption, plus government, plus or minus export, minus import, right?
Right.
And that's where the Keynes and most of the analysis based on this. Government, consumption, spending, expenditure, etc., all this. But there is a breakdown of this. I is breaking down to
Doesn't show. You take another marker, please.
Sorry?
Doesn't show. If you take another marker, so at least you can see it.
والله سامحني. I broken down to government investment and private, right?
Right.
And consumption also the same. Private, private consumption, government. And here, you know, let's export. The whole analysis for professor and most of the what's going on the economic arena now is to reduce the deficit that we have now, and cannot be reduced because the government will affect the growth rate of GDP. But there is a lot of discussion now among professionals in OECD and other countries that because of the breakdown, we can reapproach the GDP growth. We can reduce the budget deficit and continue increasing taxes, reducing expenditure, at the same time introducing new policies, a new set of policies. Three major area of policies that need to be tackled on this, to get it as a package. One is to do structural change on whole economies that we are talking about. And your example on Greek, where the main source of deficit was uncompetitiveness of the Greek to attract investment because of their deficiency on their investment environment, because there is no openness, bureaucracy, slow government, corruption, etc., etc. So all these will be tackled under, or closeness, etc., in the economy. All these will be tackled on the structural change that need to reduce or adjusted or open economy on the investment. On the consumption, it's tackled differently. On the social structure, income distribution was highly constrained in certain, the 10% on that. So if you break down and income distribution, start a new social network, so the distribution of consumption will be distributed on bigger segment of the economy. That will increase the consumption and increase and push up the growth rate in GDP. The last one is to introduce a new thing that was not in the arena of economy, which is the new or green economy. Let's introduce a new concept for growth, a new economy, a new way of culturing things, a new way of raising or fishing. All these new energy, sustainable energy, all these type of. I'm rushing and very quickly. This is whole things of concept. They want to introduce now a new economy, new thinking to what we have been doing in the past centuries. If we do this, if we do so, that will upset that reputation. Thank you very much.
And thank you for that brilliant exposition of the Keynesian economics, a completely different style and way of thinking.
Under a lot of attack now.
Thank you very much for that. Can I now invite Dr. Omar Al-Rubai, the Dean of Economics, Al Ahlia University, to speak.
Thank you very much. I think I have said already what I wanted to say, but this is rather very interesting, and I would like to thank very much Dr. Zakaria. Yeah, I came late, and they told me your name on our list, so I wasn't sure what I was supposed to do. But this kind of topics, of course, has been widely circulated, and that everybody, in particular we at the university, students always come and ask the question, what will happen? What is the problem? And why, for example, a problem happens somewhere else that will have a negative impact on us? And that's why I am very much really interested in what will be the impact of this crisis on the developing countries. I am, by profession, specialized in economic development and very much interested in the developing countries. And then the second question, it is, what will be the impact on us in this part of the world? You see, what will be the impact? And I would like to share what my previous speaker said that could have a negative impact on us. And the reason is very simple. Any recession in Europe could lead to a decline in oil prices. And we, in this part of the world, we rely heavily on basically income that generated from oil. I mean, those of you who are familiar, for example, with the economies of the Middle East, unfortunately, in the last 40, 50 years, we have not really done much in order to diversify our economies. And today, we live in an economy that is probably the same as it used to be 30 or 40 years ago. So that's why there is a need for restructuring the economic system. Now, as far as Europeans are concerned, of course, there are many people believe that the capitalist system now itself is not working. So that's why you really need to restructure the global economy. And today we live in this age of globalization, and I have already indicated that the European probably, they thought that they can ride globalization and benefit. But they underestimated the impact of globalization, and now all business are going basically east to China. It's not possible for the European to compete in the global market. But also remember that Europe is still a very important, basically, trade zone. And you know, these OECD countries today, they control about 80% of trade, 80% of investment, 80% of capital. So if we take this into consideration, then anything that's happened in these countries will spill over into the rest of the world. So that's why what is happening today in Europe is could have a negative consequences on everybody else. Now, there are always people who come with all kind of interesting, let's say, proposal as of what the Greece should do. Now, again, you know, in finance we have swap analysis. It's happened in Mexico. Why not for the United States, for example, buy the whole of Greece, and they can sweat their debt with all the services that they can do out of that. You know, some people always come with these kind of proposals. But it's an interesting, and I have to thank the EDB and to thank all the speakers for basically trying to somehow highlight these kind of issues, because we cannot basically be isolated from what's happening in the rest of the world. And as I said, and in this part of the world, is very sensitive because of globalization, and as a result of that, these kind of issues need to be taken seriously. And thank you very much. Thank you very much.
Can I invite Professor Sudhakar Raju, Mr. Veg, then Dr. Zakaria at the main front of the auditorium here? because we'll have a panel discussion, we'll have audience to ask you a few questions. We have only 15 minutes for your questions and answers. After that, we'll... Sudhakar.